Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, September the 13th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, I'm here to teach you some different strategies you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. Not a whole lot of economic data here in the United States, but across the pond in Great Britain, we got quite a few in the form of CPI and PPI. CPI is the Consumer Price Index. PPI is the Producer Price Index. And for Great Britain, we got the CPI year over year coming in at 0.6%, lower than the expected 0.7%. Then we got core CPI, which is the Consumer Price Index, core aspect of it, which pulls out some of the more volatile inputs to that index, and that came in also at a bit of a pullback at 1.3%, was expected 1.4%. And then the producer price index input, we got 0.2%, was expected 0.6%, and the producer price index output came in at 0.1% versus the expected 0.3%. So all of those, a bit of a pullback on the pricing indexes. That shows that there is not inflation, that actually prices are starting to contract a little bit. That's good in the sense of when we have a bad economy, that will help people spur spending. So hopefully that's what we see going on there. And then we got a German economic sentiment coming in at 0.5%, was expected 2.8%, so quite a bit lower than that. And European employment change upticked a little bit, which was good, and that came in at 0.4%. In the United States, the only thing that we got was the NFIB, which is the National Federation of Independent Businesses. It's the Small Business Index, came in at 94.4, right in line with what was expected there as well. On to the overall markets, we have crude oil futures giving back basically all of the gains we saw yesterday, down $1.27 as we speak, right back into that $45 a barrel range. On to the other markets. Most markets are down, even, gold is slightly up on the day, up $2, was down earlier today, but it's given a bit of a comeback there. Bonds continuing this slide as the rhetoric keeps coming out where there's more and more Fed governors speaking about raising interest rates. I'm in the camp that I don't think it's the right time. We even have Lackert saying that he's going to be stepping down relatively soon, so that's a bit of a tumultuous situation. There's a lot of mix-up going on. We also had Ginther speaking and putting a bit of a bearish tone on everything as well. He is an ex-Fed governor. The NASDAQ futures right now down 50 points on the day, giving back about half of the gains we saw yesterday in that massive rally. But the overall markets do have a bit of a bearish tone. We're starting to see volatility start to expand in many of them. And as you can see here with the E-mini S&Ps leading the charge to the downside, down 30 points. And right at that value area high, which I've been talking about, is going to act as support. So the bears really need to get it below that. You can see on Friday we came down, tested it. Monday we opened up and basically rallied from there, and then today back down on it. So that's really acting as a support. So keep that line in the sand on your note cards that is where there is a lot of support going on. Then this is the 15-minute breakdown of the E-mini S&Ps /ES, and as you can see, we haven't seen much of a bounce at all or any type of support going on until we came down to that value area that I've just spoke about, and that's where we're seeing our first sign of any type of bulls coming out of the woodwork to support this market. So we'll have to see how the rest of the day goes on, but that line in the sand is where we're really seeing a lot of support today. Then onto the overall markets that I've traded. Actually, yesterday, if you watched the daily market commentary, you heard my ding go off, and just so happened I didn't know exactly which one was that I was getting filled on, but it was DEER, and which is the ticker symbol DE. I got filled on this on that bit of a rally. Now I had on a strangle in there, and it was really close to expiring. It expired on Friday, and it took a lot of time for this strangle to decay, generally speaking, and with the volatility expanding, that made that much more difficult. So I was looking for any opportunity to get out of this. I was tested on my lower strikes, the puts, which was the SEP 82 puts, and then once the market started rallying and those went out of the money, that gamma really helped me out, because that really made those options decay rather quickly for just a few moments as we were pushing higher and away. Probably could have gotten filled a little bit better had I not just left that in there, but I wanted to get out and get safe. So I put it in a resting order at about where I wanted to be out, and it got hit. So while we were doing this video, and I had on the September 82.5, 92 strangle. So the 82.5 were the puts, the 92s were the calls that create that strangle, and I had originally sold it for $1.34 and bought it back for 75 cents. So pretty close to the rules that I talk about of being 50%, just slightly higher or less than 50% of max profit on that. But again, like I was talking about going into the last few days, I did not want to be having that on and having those puts go into the money and create a losing trade out of that. So I took any profits that I could get. So with it being this close to expiration, that was a very touch and go situation as to whether or not that was going to be profitable. But you know, that's why sometimes you put those orders in early and allow it to get hit as the day goes on. You don't have to be watching it all day. So that's all I've done. I haven't really put on any new trades today. I'm looking for some opportunities in the market, but the market's just not really giving me anything right now. Volatility is not expanding as much as I'd like to see, but given that, with this type of market, with the give and take back and forth on a daily basis, that's going to be a good environment to put on some iron condors when we see that volatility expand. So that's what I'm kind of holding out for. I've been doing several scans trying to find some opportunities of maybe some stocks that I haven't traded, but I haven't seen anything really jumping out at me, so I'm just kind of sitting on the sidelines right now, playing around in the futures, but that's about it. Friday's webinar, we're going to be talking about opportunities to create a synthetic short on an underlying. So we're going to be taking the options, we're going to build a synthetic short. Sometimes it's really difficult to go out there and actually borrow stock to get short. Plus the margin hog that is doesn't really make a whole lot of sense. So I've got a strategy here where we can take the same type of scenario, create the same risk parameters as we would shorting a stock, but using options, using a lot less margin, and it's going to increase our return on capital because we're using such a small amount of capital in the beginning that our risk reward ends up increasing, and that increases your return on capital. So stay tuned for that one. You can go to protraderstrategies.com, sign up for that. That's all I got for you guys today. If you can't take that, take it easy.